Traditional business loans and how they work. What is a traditional business loan? Typically, it's a business loan through a bank. Now, there is a place for these business loans. Now, we are going to show you a better way, but it's very important to know how these traditional business loans work. So you'll have the knowledge when you're talking to your client, and they'll look at you as an expert, which is key. It's very important. So the two scenarios are long-term projects that require drawn-out payments. That may work. And of course, commercial mortgages are long-term business loans as well. Now, what are the turnaround time and the outcomes for these types of loans? Well, 8 out of 10 typically get turned down. Now, this can vary, but yes, 2 out of 10 will get approved. In addition, it can take 2 months for the approval. And then after the approval, it may take another 3 months to fund, if they even fund, if it doesn't fall through. And that 3 months can turn into 4, 6, 8, 12 months in a lot of cases. But we're going to show you a better way. But for now, let's see why this happens. So why are there so many turndowns? Well, part of the reason is the requirements. These banks require credit scores of 680 or more. In a lot of cases, sometimes it's well into the 700s. Now, 680 is not a great score. But we know business owners take risk, and they fail their way to success. They're used to it. So their credit's not going to be perfect in some cases. The banks will also require business history of 2 years, a healthy cash flow of $50,000 a month, management experience, which is like a resume, a business pro forma, personal financial statements, which lists the business owner's assets, a debt summary, and there's even more, a cash flow statement. They'll want 2 to 3 years of taxes, a current business assets, any kind of real estate property information, market evaluation of the business. They'll want 3 to 4 months of bank statements, business bank statements, merchant service statements. Now, these are credit card processing statements, and there's much more. There's a list of anywhere from, 15 to 30, depending on the bank you go to. It's a ton. So it's no wonder these business owners are looking for something else, something better that you can offer them. Now, let me go over a quick scenario. Let's say business owner has payroll next month. Next month comes in a week. They have employees on the book that they want to keep, but for some reason they don't know how they're going to pay these guys. What do? They go to a bank. Now, the bank tells them it's going to take a while to get the money. That does nothing for that business owner. So where else can they turn? Well, a lot of times they may get a second mortgage on their home. They might use credit cards, a personal loan. Who knows? You have a better way. How did all this happen? Well, back in the 2006, 7, 8-ish time frame, this country went through a financial crisis, and banks quit lending. And the ones who were lending raised their requirements, which has carried over to today, okay? Which has caused the evolving of the short-term business lender, which we'll go over in the next video.